Welcome to the Payments Trilogue, where three seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Salmony, and I'd like to welcome you to another episode of the Payments Trilogue. In this time, we have the pleasure of Jeremy Light, who has been in payments for a while, knows everything about it, and is a very prominent blogger and Substacker, and a lot of people follow him because he's super knowledgeable on this topic. So thank you for joining us, Jeremy. And maybe you can just give a quick intro to what your background is and where you come from.
Okay, thanks, Michael. As you say, I have quite a long background in payments, mainly as a management consultant. I had a very long career in management consultancy, where I specialised in payments for a long time here in the UK, but also across Europe and Latin America. And then about 7 years ago, I joined a company in Silicon Valley where we were building a cross-border payments network. And more recently, I've set up my own business with a co-founder where we've been building a micropayments digital wallet. And as you say, also spend quite a lot of time writing a Substack each week on the subject of payments.
Excellent. And the more perceptive of you will notice that there's one guy missing from our trialogue. It's actually a duologue today because unfortunately Gijs had his laptop stolen, and so he's in the process of trying to find a replacement, but he may join us a bit later on. So, Jeremy, you published recently a very interesting article that maybe the way to sovereignty for Europe is through A-to-A wallets. Can you just expand on that idea a bit?
Sure. Yeah. In the Substacks I've been writing over the past few months, it's become very clear to me there's a trend towards digital wallets with account-to-account payments that are real-time for all types of payment, in-store, on the street, online, and so on. And if you look at Asia-Pacific in particular, but also other countries like Brazil, these are very well adopted, and they are in many countries they surpass cards. And if you look at countries like India, for example, they're processing 18 billion payments a month. I mean, it's huge. China's even bigger. China, I think last year did 1.3 trillion payments. That's not value, that is volume, number of transactions through, in particular through Alipay and WeChat Pay. And I don't think it's appreciated that much, certainly in Europe and North America, how advanced these payment methods are. And I think the good news for Europe is that they're already here. I mean, if you look at Swish in Sweden, you've got Blick in Poland, Visma in Spain, RoPay in Romania, and so on. And it's a very good starting point. And they're all quite well established. I mean, some of the volumes, I think Swish does 1 billion payments a year itself. So I can see that this is the basis for where payments are going to go. And so you've got a great starting point in Europe, and then also you've got the likes of Wero that are, they've launched in France and Germany. They will be, they've acquired Ideal in the Netherlands and so on. So I think this is a very strong trend, but it's underappreciated. And people have still got that mindset around cards. I think one of the biggest changes and differences with digital wallets using account-to-account real-time payments is that it completely collapses the value chain. Okay, so in the traditional cards value chain, you've got on the merchant side, you've got the acquisition through point of sale or online, and you've got the merchant processing, with chargebacks and routing of payments and so on. Then you've got the acquiring side, where where merchants can have accounts, they can settle their payments and so on. And then separately, you've got the issuing side, where the issue is typically the banks. They issue the cards, they do the statementing, they collect the payments. Then you've got the processing side with authorizations and so on. So it's quite a big value chain, and typically the revenue available in that is quite big, 1 to 2% of transaction value in total. So many people, including ourselves, no doubt, have made money out of that and benefited from it for decades. But with digital wallets, that is completely collapsed. All you need to do is just download a wallet. You link your bank account to it, you onboard yourself, and away you go.
It just goes straight from account to account, right? As the name says.
And because with the card, you can't accept a payment. With my debit or credit card, you can't pay me. I've got to have a machine of sorts or some device and an account somewhere and a contract typically. But with digital wallets, it's just like that.
Give Ralph an opportunity to comment on that, because he's a big fan of what you're describing, right? And so would you see the same?
But first the question. So because that there are all these different kinds of wallets, and well, firstly, I would say the vast majority are these card wallets. So you have a virtual card in your wallet. So it's basically a wrapper around the card. So you don't have to have the card with you. You just have it on the phone, but it's sort of like still a card payment, and which is of course different from, say, a PayPal wallet payment or whatever other types of wallets, and also what Vero is planning in terms of wallets. But so first question I actually have is how important do you think is it that the wallet is a separate branded app as opposed to say Swish or Vips or Twist or Twink and Blick and etc. and Bithum, which are mostly accessed through the bank app? And so the customer is not having like a separate app. Is that an advantage or a disadvantage in your mind too?
Well, it depends how it's set up. And I don't think there's any right answer. But one point I would give is in India with UPI. Right? So UPI, as you're aware, is the real-time payment system. And any bank and any non-bank, obviously with the right authorization and license and so on, can link to it. Okay, and I'm sure when UPI was created that the Reserve Bank of India was planning it to be a bank application, right? But 97% of those 18 billion transactions a month go through non-bank digital wallets. Only 3% go through banks.
So if I just interrupt you, in fact, the sovereignty agenda didn't work in India, right? It was one of the goals of UPI, but it turns out actually the Walmart and the Google apps are the ones that are taking the back.
Exactly. They escaped from Visa and MasterCard only to get Walmart and
exactly.
And Google.
But with Ralph's point, I always think of wallets as coming in three flavors. One is like the Apple wallet, where it's basically just storing your cards. The other one, which is a true wallet, where the value stays in your phone and you sort of send it. And the other one is a sort of proxy wallet, where your phone just initiates money away. So the last two are without cards, and the first one is with cards. Are you particularly religious about any of those? Which ones work best for A to A? Or?
Well, I think the link to the bank account is one that works, because that's where people keep their money. It's in a bank account. So having a wallet that links to a bank account and allows you to initiate payments and receive payments as well into your bank account. Because that's how UPI works. You download a Google wallet or a PhonePe wallet, you link your bank account to it, and you can now make any payment from your bank account to any other bank account in India, but not you can use the bank account details, but you can use a phone number, a UPI ID, and so on. I think that model works. And if you look in other countries like Kenya, for example, with M-Pesa, which was also another hugely successful wallet. That started as a cash-in, cash-out service, and I think when it started, about 20% of the population were banked, and that was 20 years or so ago. That's 18 years ago. Whereas now 89% are banked as a result of M-Pesa, because they link their bank accounts to the wallet. So I think that definitely seems to be the model that works. But having said that, I think you need a mixture. It's what I call hybrid wallets. So it's not just about a bank account. It's not just about a stored value account. It's not just about cards. It's the ability to have a mixture. Okay, so
your work with Ripple to do this cross-border thing, you would have the value actually in your phone, right, and not on a bank account typically, I would imagine, right?
yeah, I mean, putting money from a bank account into a stored value account is, particularly for cross-border payments, can be one way of doing it. But rather than try and guess which is the right answer, if you provide all of them,
Very good. Yeah.
let the market decide.
Yeah.
Yeah,
But
but
people
isn't
should be happy, right, with those ideas. No?
well, I'm I don't know. Well, as you know, I'm doing mostly open banking, and so there is no app. We don't have anything of that. So it is there is no real estate on the customer's phone at all, typically. So which is of course a difficulty, and hence also looking for other solutions there. But
That's the sorry to interrupt. That's the issue with open banking, is that you're at the mercy of the mobile banking app of the bank, and
yeah, that's
they're all
right.
different, and they're all optimized. Well, not optimized. They're all secured for payments up to €10,000 or more, right? So if you want to
Yeah.
do a €3 payment for a cup of coffee, clicking through, did you really mean to do this payment? Do you know it's nonsense.
Yeah, I know, exactly.
Whereas these
So
digital wallets I'm talking about, they've all got an interface that is standard and optimized for all use cases, whether it's online using QR codes, point of sale using QR codes, or using links or whatever.
Yeah, so this is where we are also, as you say, relying on the bank app. But as I said, many, or actually most, I think, of those European wallets currently working are bank apps, are the bank app doing a Bithum payment or a Blick payment or whatever. So it is not, that's hence my initial question there, if that is a disadvantage or an advantage. Versus an approach which like Vero, they have a dedicated app for the purpose, a dedicated wallet. And we have discussed with the Vero proposition here before, and with Martina, and we have also discussed the EMSA approach with Chris Pergner here, and the pros and cons of each. But yeah, from my more fintechy perspective, I think we have a dependency here, and of course it's true that it is a lot to do with the SCA process and how good or bad that is being implemented. So, which is also why we are proposing a solution to that with a much more straightforward or slicker authentication process based on, of course, biometric SCA and all that. But so we've discussed that in one of our last episodes. Here for the wallet, I'm therefore tending more towards this bank app thing, but stand to be corrected if you think the one or the other is better. But what you just said, I think, you think both is an option. But then they are in competition, so I'm not sure you will have both. So I think you will have more one or the other, and also probably not as a stored value wallet, because that again is yet another approach, which I think neither the bank app nor a Vero app would probably provide. I'm not sure, but I guess so.
Yeah, I mean, certainly if you're linked to your bank account, you don't really need a stored value account. But there are particularly, I mean, it's less of an issue in Europe and North America, because most people have got bank accounts. But in countries like India and in Asia and so on, that is less the case. So by having stored value account with a bank account, enabling stored value accounts and bank accounts is the way to do it. And as I say, the trend seems to be that when that is offered, that people then who haven't had a bank account in the past, they then get a bank account, even though they can use it with a stored value account. That's been the case in India and Brazil, and I'm sure elsewhere.
Absolutely.
Yeah, and I think this stored value, I mean, it's basically the prepaid card model, just in a wallet format, and which has, of course, its advantages, but also its disadvantages. Like you first have to load it before you can use it, and although I mean there is automation coming into that as well, so we're further down the road now with these than we were like 10 years ago in making this preloading more automatic.
Yeah, and also you can have it as a pass-through. So I think PayPal operates like this, certainly in the UK, where you may not have enough money in your PayPal account, but you can make the payment and it then pulls it off your bank account as a direct debit. I mean, they're taking a bit of a risk in the UK because they don't know whether the money's there unless they use open banking to do the check. And it's the same in things like Alipay and WeChat Pay in China. If there's not enough money in your wallet, it will just pull it in real time off your bank account.
That's the famous waterfall and reverse waterfall, which we see in CBDC. In fact, it'd be interesting to hear your take on that, because you recently mentioned that the digital euro is a quixotic project. Can you enlarge on that?
The reason I say that is because no one wants it, from what I can see. Commercial banks don't want CBDCs because, at the sort of macro level, it interferes with money creation and lending money and deposits and so on. But at the more prosaic level, it's going to be another massive project for them to integrate CBDCs into their mobile banking apps. So commercial banks don't want it. Also, the population who are aware of it don't want it either.
And merchants may want it, right?
Sorry?
But merchants may want it. It's a cheap pan-European.
Merchants will use anything that is cheap. Sorry, the key values that merchants are looking for. One is it's low cost, but more importantly, does it generate them extra sales? Incremental sales is what's important to merchants. So whether CBDCs do that, I don't know. But it's it's a chicken and egg. If lots of people have got CBDC wallets, they'll accept them.
But here, the connection to the wallet, because we've obviously discussed the CBDC and digital euro here as well before, and I think our conclusion was a bit like the offline version would be very valuable, with doubts on the online version or account-based version, which is more in competition with private payment solutions. But the offline version looks very similar to a stored value.
Oh, exactly.
Wallet.
Yeah. I mean, CBDC is logically equivalent to e-money. So it's equivalent to a prepaid card or a PayPal account and so on. But I do agree with your assessment that an offline version is where the value is. Imagine in Spain and Portugal this week, it would have proved very popular.
The outages in Spain and Portugal made a lot of ECB people very happy, right? Because it shows the need for an offline.
I mean, because there's no equivalent with your bank other than obviously physical cash. Although obviously you can use cards to some extent if the authorization system's down. But obviously, if everything is down, there's no electricity, nothing will work.
Absolutely. So we welcome Gijs into our trilogue. I hope your laptop got found again.
No. I got a new one, but it means all sorts of settings you have to redo.
The joys of technology. It's made our lives so much easier.
Well, we've gone through quite a bit already, but and just got the connection here between like a stored value wallet and the digital euro plan, at least for the offline part of it. And I think that is where a lot of value can be seen, and also like it's essentially a digital version of cash, where you have a more future-proof version of cash and can use it that way. So.
It's a modern version of cash, right? It's offline.
But a lot of the investment comes in when you have an account based, and when you then have the waterfall and the reverse waterfall, and then you have the links between accounts, and then that's where all the complexity comes in. There's also then the holding limit, and then all the complexity is linked to this account based thing or the account linking. Whilst in this particular case, I think the stored value type of the wallet would be quite appropriate.
But Ralph, we had this discussion. What would it have helped in Spain? I mean, people are not carrying huge amounts of money on their wallets or in their wallets. So you do have to have a pretty big amount pre-stored on your offline wallet for it to be of any use in case everything goes down. So we have to also sort of nuance the added value of the offline thingy in case all power goes down, because there you are with your card or phone or whatever, if your phone still works, with a wallet with stored, well, maybe no store value because I didn't store any. I can't use the reverse waterfall or the waterfall because there's no electricity. So I stand there basically with an empty digital wallet, right? Just as I forgot to go to the ATM to get banknotes, I stand with an empty physical wallet. I mean, you would all have to have a ration, which you would need to have a minimum ration of cash or digital cash just in case. And well, when in troubled times people do that, they store batteries and candles and water. And as time goes by, they start burning the candles and drinking the water and using the money because nothing happens usually.
Yeah, but this is where good old physical cash comes in,
Exactly.
of course, which is supposed to be stay around, of course. And by the way, Jeremy, I saw one of the stats that you showed was about, well, the declining use of cash and proxied by the number of ATM withdrawals.
Yeah.
And so what's your expectation there on where is the cash thing going?
Well, I think, well, as we all know, cash is decreasing almost everywhere. But I think there is a lower limit. I mean, we're seeing that in Norway and elsewhere in the Nordics, where both from a consumer point of view, but also from a regulatory point of view, they want to have some level of cash that's available to the public. But the problem with cash is that it's only useful if people accept it. So that's why we're getting these regulations. And I think there's some I read in the UK today about them thinking about forcing shops to accept cash, because if you can't, if a shop refuses to accept cash, like a lot of restaurants nowadays refuse to accept cash. 10 years ago, it was the other way around. They might prefer cash over cards. But unless it can be accepted, it's not particularly useful. But I do see it plateauing out. At around, I think Norway's 4 cash withdrawals per capita per year on average.
But just a small correction or clarification: the use of cash is reducing. The amount of cash in circulation is actually increasing. And people are hoarding it. ECB is printing more and more banknotes every year, right? But the use of cash is absolutely decreasing. That's for sure.
Yeah.
Okay, if I may jump in, let's take the Nordics and especially Norway out of the equation, because they have always been so different because they're so vast with so little people living there. That's why they have mobile phones and no cash, because that's not very handy, landlines and cash if you are living hundreds of kilometers away. I think my country is a better gauge of where it is going in more, let's say, more densely populated. We are the most densely populated, by the way, on the continent, I think, apart from maybe Monaco. It's horrible. We're a small, very densely populated country. But the bottoming out is a relative thing. Depends on where you come from. And the Nordics have bottomed out. I think also my country, we have bottomed out. We saw a dip as low as 15%. And then if you have to be very precise on definitions, what do you mean? We, in our country, calculate the number of point of sale transactions, electronic versus cash. We have now bottomed out at 19%. And it has been stable for 4 years now. We thought it would have decreased till below 10%, but it doesn't. So apparently there is a national sort of equilibrium somehow, and in my country that seems to be around 20%. And at that exact point in time, whereas without any intervention from the regulators, it seems to have bottomed out. The regulators also step in, and on the one hand, they are now there's a law going to Parliament in my country mandating the banks to maintain the basic cash infrastructure. That's the one thing. And all banks having to finance that, even those that are not non-Dutch but have more than 500,000 Dutch customers. It's a sort of socializing the cost of cash. That's the first thing is have to maintain the cash supply infrastructure, and you complement it with an mandatory acceptance, which will come from Brussels. The legal tender regulation will make cash acceptance mandatory. And there's only very limited room for exceptions there from physical security of shopkeepers. But there's an extremely small margin to not accept cash. And the consequence is that in my country, some shops that have stopped accepting cash will be forced to accept cash again. So I don't see the problem with cash anymore. It has bottomed out. It's become normal. Those who want to use it can use it. The infrastructure will be there as long as it's needed. So there is no problem anymore. That's a
Would you
different
agree,
time, right?
Jeremy, or do you have a different view on that?
Ralph?
Ralph, I think your
Back on
microphone.
mute.
Yeah.
Oh God, okay, that was stupid. Anyway, so the other thing I have noticed in your report was about the other stats that you showed was, or graph, was about the use of A2A in different countries and how it compares with cards, right? So I think you're suggesting that it is growing fast, but it's still far away from the number of card transactions, obviously. So
Well,
do
it
you
certainly is
see
in
it
Europe.
overtaking?
It certainly is in Europe and Australia and the West and so on, but it's not the case elsewhere. In India, the card usage is very low compared to A2A. I mean, it's still substantial, but it's low. Same in China. In Brazil, it's about 50-50, but PIX is growing so rapidly that cards are decreasing quite rapidly there. So, I see cards and A2A coexisting for quite some time.
I mean, the trick we've got to get together in Europe is how to connect all these different local solutions, right? Because you gave the long list of bisums and twists and twints and swishes and whatever's, right? And that really isn't what we need for the future, right? Do you have any views how that's going to work?
Well, you've got to have interoperability at the clearing level and the settlement layer as well. But my question is, how does it need to be uniform as long as it's interoperable? Because if I look at the figures, the actual cross-border payments within Europe is 5-6% at most. If you look at the tips, instant SCTs going through the ECB, it's about 3% of total SCTs. SCT in same, and I imagine EBA clearing's probably got a similar number. So it's about 6%. And also I look at other data from other countries. So the point is that 95% or so of payments are made within a country, right? And most of them, 80% of them, made at point of sale. So unless you're living on the border between countries, you're not going to be making many cross-border payments. But having said that
is true. But this was the argument that was brought against SEPA. Why do we actually need to create SEPA? Because only 3% is cross-border. But actually, it turned out it was not a bad idea to do SEPA and do it in a harmonized way across Europe. Right? And maybe this applies to the wallets now as well.
Well, I think but how would you achieve that? I don't know. I mean, you've got. I'm a great believer in market forces. You've got Swish that has developed through market forces and through market demand from consumers and the supply side on the bank side. Same with Blit, Bism, the whole lot. How you can then reconfigure them so that they are a uniform.
There's these interoperability models like EMSA, and there's the greenfield models like EPI, which says let's create. But Ralph was shaking his head. He was disagreeing with what I just said. So please feel free to.
No. But there are. Well, we have these. I also noticed that you were rightly saying that the vast majority of payments are obviously domestic, national, and both. EPI and EMSA here in the past have said, well, they want to win the hearts and minds, or you have to win the hearts and minds of the payer, especially as there are many other options, and there have been many other options already long time around. And the question for me is also how big a part does this interoperability or this cross-border payment actually play? Percentage-wise, it's already low. And you have a lot to do to get there, and a lot of investment. That's also something I think you mentioned is questionable whether it's actually affordable.
Yeah, well, I mean, the relative cost of making it interoperable compared to making it domestic is huge, but for the benefit you get. But having said that, you need it to complete the proposition. It's the same with, I like the mobile roaming analogy, because with a mobile phone, if you couldn't use it in another country, within Europe or elsewhere around the world, it doesn't become particularly useful. But the fact that it does work wherever you go, admittedly, you may get different charge rates, particularly if you go outside of Europe. But having that completeness of the proposition, I think it's very important. And it's the same with payments. And it's
That's a lovely analogy, yeah, because most of your phone calls are going to be in your village or in your town or in your country, but you still do need roaming, right? So
yeah,
even
Yeah,
yeah,
but
But it's
then
capped,
if I,
right? We have capped the fees for roaming, and they are now uniform in the EU. So
yeah,
we have a regulated business model, cap on the business model here. But
yeah,
I would also like to add something else to this discussion: the greenfield or the interoperability. I believe we need both. It's not either or; it's both. In some instances, greenfield will work, and in others, there is vested interest, like Bizum, Blik, and as I said earlier, you can't expect anyone that has a growing and very successful domestic solution to just kill the darling because you believe greenfield is better. And it doesn't really matter because in the bigger picture, we just want to have homegrown European solutions. So it may be suboptimal from, let's say, a conversions point of view, but at least they are homegrown European solutions and not, let's say, American solutions or Chinese solutions. So if you look at it positively, one road would be the greenfield side, the other convergence through interoperability. But the important thing is that you will, let's say, preserve the payment volume because you need all the volumes. That is the thinking also behind EPI. If you only go for fragmentation, you will never have the economies of scale you need to be competitive with those that have these economies of scale, and which are the ones you have to compete with by the end of the day. So people tend to forget, oh, if we just tie it together, it's European. Yes, in the short run, but you will never be able to sustain it in the long run because you will not have the money to do that or the efficiency and the economies of scale to do that. People tend to forget that. Just tie it together and then, well, we've solved the problem. Yes, short term, but not long term.
yeah, good
What is your
point.
take on that, Jeremy? Because this is one of my favorite hobbies these days.
um, yeah. I mean, I don't know the right answer, but what I do know is it needs to be more than Europe, though. I mean, even if you get a wallet or a payment system that works, is one brand, works in exactly the same way everywhere across Europe. What do you do when you're traveling to the United States?
Sure. Well, you
It's got
co-brand
to
as
work.
we do today with Visa or
Got to work.
MasterCard.
Yeah, got to work. It's got to work there as well.
Sure.
And
Or you
that's
do interoperability with the schemes in India and
Yeah, whatever.
whatever.
yeah.
Whatever
Yeah,
it takes.
yeah,
So that,
exactly.
I was about to say, so what do you, if I need a card anyway to go to America or outside Europe because the European payment options are not available there. So if you need a card anyway, then I may as well use that card also when I go to France or to whatever. So for the 3% of cross-border volumes that I'm making or that I need. So
well, yeah, it's a good point. But I mean, what it comes down to is the UX and the convenience of using the wallet. You hear stories in Poland and India and so on that people actually love using their wallet. They find it really convenient for both accepting payments and making payments. So they're using it all the time, right? The okay, with cards with Apple Pay and Google Pay and so on, it's a very slick experience. So people love
Yes.
tapping that as well, but it's of a limited use because you can't accept payments. Um,
I have
Well,
one more
phones
question
can
though
do that
before
now
we
too.
run out of time because the other thing is credit. I mean, I know it's in Europe mostly we use debit cards, but well, there is a credit element to the card usage. Do you think that is a feature that would be required for account-to-account wallets?
more than likely, but again, credit payments, what, 5-6% of the total. It's happening in Brazil where there's with PIX, there's some banks like Nubank, they're offering a credit option. Essentially, it's just a bank account with an overdraft,
Yeah.
you're just making a normal payment, but it's going through to an overdraft rather than through a debit balance.
Or BNPL solutions or
All that,
Yeah.
exactly. Yeah.
yeah.
We're almost at the end of our time, but just maybe 2 more minutes on micropayments because you've done some work on that, and sort of these stored value wallets are surely a great way of doing micropayments. Can you talk a little bit about that? What you're doing there and why it's working or why it's so hard to make it work? Because the industry doesn't seem to have cracked it so far.
Yeah, sure. I mean, that's been one of my interests over the past few years is developing a micropayments wallet. And the rationale behind it is that it's very difficult to make cost-effective payments below a certain value, say below 20 euros. Okay, simply because of the costs start kicking in. And, if you even if it's a fixed cost of, I don't know, 20 cents or even 10 cents a payment, when you start getting below 10 euros, that starts becoming 1%, and then €1 it's 10 cents a payment, and so on. And because of that, there's a huge reluctance, particularly amongst the card companies, because that value chain I was just talking about earlier can't sustain very low fees. There's reluctance to optimize it for anything less than 20 euros or so. I mean, obviously you can. I mean, I can regularly buy a packet of peanuts with my Amex card, but that is a very an exceptionally low volume of payments made that way. So, whereas particularly in the subscription economy we have nowadays, when everyone's got subscriptions, like Substack, for example. I mean, if you're familiar with Substacks, there are literally hundreds of really good people you can follow. But if they start charging €5 a month each, you're never going to afford it, let alone be able to read it all. What you really want to do is be able to pick and choose. Like, so this article about wallets in Africa, or about, I don't know, growing maize in Australia, or whatever. It's interesting. I just want to pay 50 cents for it, or €1 or something. But you can't do that. And it's that model which I think is the one that's to be cracked. And the first step is to crack the cost, right? Which means getting well away from the certainly the card system, the card networks, because the fixed costs there are too high, and probably getting away from banking networks as well, so going through a stored value account, which you can operate at scale at very low cost.
So a stored value wallet, be it traditional sort of on a phone, or even the CBDC offline wallet, should be able to do fractions of €1 at very good cost, right?
Yeah, I mean, or even you can have it linked to a bank account. I mean, there's a great video on LinkedIn which I've linked on one of my Substacks of someone paying for, I think, some chewing gum in India, which is 1 rupee, and that is about 10 cents. And it goes through. It's fantastic.
Fantastic. Yeah. Okay, I think we've reached the end of our time. That was really fascinating, talking about wallets in their various guises, a little bit about the quixotic digital euro, and a little bit about micropayments. Jeremy, thank you so much. Your bookshelf is only half as full as mine, but you're twice as smart. So it's been a real pleasure talking to you.
It'll fill up eventually.
Okay, so thanks to everybody for watching, and thanks to my co-hosts, Gijs and Ralph, and to you, Jeremy, for joining us for this session.
Well, thank you very much. I enjoyed that. Thank you.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.